Good morning, ladies and gentlemen. It is 9:30, so if we can start the meeting. The first item on the agenda is the appointment of chairman of the panel. So please, may I have members' nominations?
Thank you. I'd like to nominate Philip Atkins, please.
Is there a seconder for that?
I'll second that.
Okay, and are there any other nominations? Okay, and could I take a vote from members, please? All in support of Philip Atkins be appointed as chair? That's lovely. Thank you very much. In the absence of Mr. Atkins at the moment, we need to appoint a chairman for this particular meeting. So could I have members' nominations, please?
I'll propose Mike Sutherland, if I can. Thank you.
Is there a seconder? Okay, and that looks like it's accepted. So, Mike, over to you.
Thank you very much. Good morning, everyone. We are, just to remind everybody, on webcast today, so I welcome the visitors that will join us during the day. Do we have any apologies?
No chairman, no apologies for this morning's meeting.
Declaration of interest? Any declarations? I'll take that as a no. And I thought, as we're not quite a new panel or committee, I thought it pertinent that we might introduce ourselves, because we do have a new member this time. So I'll start with my good self. I'm Mike Sutherland. I am the county councillor for Edging Hill and the Heath, which is a division within Cannock Chase.
Thank you, Chairman. My name is Mike Davies. I'm the County Councillor for the Division of Wombourne.
Colin Greatrex, I'm a County Councillor for within the Lichfield District, and I have previously been Pensions Chairman.
Mike Bradbury from the Member and Democratic Services team.
Melanie Stokes, Assistant Director for Treasury and Pensions, with responsibility for the Pension Fund.
Tim Byford, Strategic Investment Manager, working in the Treasury and Pension Fund section.
Rob Birch, I'm the Chair of the Pensions Board. I'm here to observe.
I'm Stephen Sweeney, County Councillor for Newcastle South Division. Thank you.
Philip Atkins, I'm County Councillor for Uttoxeter Rural.
And welcome. You are now the chair of this meeting. We've got two declarations of interest. We're now moving through to the minutes of the meeting. Oh, and I've just realised that I haven't introduced our webcasts. I was going to say guests. You're not a guest. So could I ask you to introduce yourselves, please?
Caroline Dobson, and advisor.
Thank you. Welcome.
Ian Campbell, investment consultant from Hyman Robertson.
Welcome.
Thank you.
So, Philip, may I hand over to you now as the chair of this panel?
Oh dear. Yeah. Item 4 is the minutes of the meeting held on the 2nd of March. Can I take it those are a true and correct record? Yeah. Thanks, Colin. Yeah. Agreed. Moved. Seconded. Yeah. Mike Sutherland seconded. The next item is dates of future meetings. We've got Friday the 3rd of September, Tuesday the 30th of November, and Tuesday the 1st of March 2022. We're all looking ahead. All meetings are scheduled to start at 9:30 a.m. and I must get up earlier in the morning to get here on time, unless indicated otherwise. Item 6 is the Staffordshire Pension Fund performance and portfolio of investments as of the 31st of March 2021. Over to you, Melanie, I think. No, it's Tim. Tim.
Morning, yes, happy to take this one, Chair. This is agenda item number 6, the usual pension fund quarterly investment performance report. This shows a good performance in the quarter, 0.6% above the benchmark, which took the annual financial year performance to 2.5% above benchmark, with healthy returns of 26.9% against the benchmark of 24.4%. Global equities were the main drivers performance of the year, although they came from a low starting point at 1st April last year, which was just as the pandemic had hit. And commodities and oil stocks, which were unloved for most of the year, came back into fashion during the quarter, it appears. Central banks and central government policies were still accommodative, which helped with the performance of the year. An example in the report was, in the latest quarter was the new US president sealing off a rather large stimulus package for infrastructure in the US. And in the UK, vaccination policy helped with supportive the markets here. The fund value at year end, 31st of March, was 6.1 billion, which is shown in the appendix where the portfolio investments are shown, which was the highest, again, the highest we've recorded at a year end. And happy to take any questions on the report or its appendices as you see fit.
Are there any questions or comments? Mike Sutherland.
More a comment than a question. I think, let me go back into the report. 2.1, I mean, phenomenal numbers across each and every quarter. And to end up with the sort of numbers that we have finished with is, for me, I think, is almost remarkable. So an excellent financial year in terms of numbers. I guess bated breath the next quarter. So thank you.
Yeah, just a comment that I'm wanting to give every time I see something exceptionally prove well. You know, when do we know where we reach the crest of the wave and we're about to hit the decline? I saw the global active equities was the best performing sector. And obviously there are things happening globally which are very much behind that. But we must get to the point where the intense amount of growth must reach a point. So do we have a view from any of our advisors where that might be?
I think it would be reasonable to say that markets have been very strong, stimulated by unheard of government intervention, and that as that government intervention slowly declines, markets will have to stand on their own feet on the back of however strong economic growth is. So in terms of your crest of the wave, you may be closest to the top of that crest, but long-term investing is about riding all the crests of the wave and just keeping going, just making sure that, you know, when you go down a little less than you might have. When you go up a little more, and then over time you gradually make good progress. There's little you can do to protect yourselves from crests of the wave, as long as your risk structure in the portfolio is appropriate to the reward you're looking for. And that's what we've been doing, constantly rebalancing the portfolio so we take the minimum amount of risk possible for the reward that we need, and remind ourselves always that we are paying pensions in 30 years' time. Therefore, to earn that return, we need to be in markets. And all the statistics show you that there are, if you excluded the really big days in the market, less than a dozen, returns would be over 20 years, 3% lower. So you really have to be in the markets to get those days. And it's about balancing the risk appropriately.
Any other comments? I think 6.1 billion at the end of the year is quite phenomenal. And the strategic allocation has been working for us, so I don't see any. I think the plan's worked, but we do live in interesting times, and I think it's quite right what Carolyn and Colin have just been on about. With in my farming world, it is very volatile at the moment in commodities. Is all I'm going to say. Item 7 is responsible investment report quarter one. That's Melanie.
Thank you, Chair. This is the standard item that we have on our agenda around responsible investment and the activity of our investment managers and our engagement partners, LAPF and LGPS Central. The report this time has three different elements to it. We have the LAPF quarterly report, which highlights the work that LAPF do on behalf of almost all of the LGPS funds now in the UK. We've also got the LGPS Central annual stewardship report for 2020, and this replaces the quarterly report from Central because obviously it gives the whole picture for the year. It also really provides the evidence that LGPS Central need around what they do as part of the 12 principles that they have to demonstrate compliance to become compliant with the UK Stewardship Code, which is something that the fund's going to have to do itself over the next 12 months. So it is a useful document, and we've got training as well next week on responsible investment. So if members do get a chance to have a more detailed read of that stewardship report, I think that would be helpful ahead of the training. So the third bit of the report is the Staffordshire Pension Fund Climate Stewardship Plan. And you'll remember that we had the training and the at the Pensions Committee 2 quarters ago now from LGPS Central around the climate risk report that they'd done on our behalf, and one of the recommendations from there was that we developed a climate stewardship plan. That's presented to you today at Appendix 1, which is on page 34 of your pack, hopefully. Really, this is for us as officers and as a panel to look at and consider each quarter. It's split into two. One are companies recommended for engagement, so it's the company that we try and engage with there. And the second point is the investment managers that we try and engage with, so those people that do that engagement on our behalf. And what really this has sort of picked up from the climate risk report is a number of things in terms of the areas where we should be focusing our activity in relation to climate change and where we can start to make a difference. So basically, we will bring this to you every quarter and we'll highlight the work we've done over the quarter in engaging with those managers. Over the last quarter, for example, on page 35 and 34, China Resources Cement was one of the biggest emitters of carbon in our portfolio, according to the climate risk report. We, on the back of that, set up a meeting with JP Morgan, our asset manager. They had actually sold out of the stock anyway, but it was useful to have the conversation about their reasons for that. So it sort of informed our conversation for that. I think on page 35, we've got Rio Tinto, we've got Shell, and we can see that LAPF have been engaging on our behalf with those companies, so a more direct into the company than we can have ourselves. So I think, the climate stewardship report is a good working document for us to look at and to see the activity and where we can make that difference. I think the other thing that I wanted to say on the report this time is on paragraph 12 on page 29. And I think it just highlighted to me this time that there are quite a number of votes against management in the table there on the investment manager voting activity. So 17% of the votes cast this time were votes against management. So I think that's sort of proof really that the engagement and the voting is a very active dialogue with the managers. Happy to take any questions on the report.
Yeah, I'll probably save a few comments for the training if it's on responsible investment next week. But I do sort of struggle in terms of how we address all of the priorities all at once. When you think of the 12 principles that we've got to adhere to, and you look at the stewardship report from Lgps Central, and there's 6 themes there that are all important. So how do you chase all of them all at once? But I just wondered, and it's probably unfair to ask the question of you, Melanie, but I just saw in the report that the stewardship report from LGPS Central, page 66 of the PDF, or page 62 of the report, the number of officers that they've got directed towards stewardship. And they're saying that it has been as few as 2, and it's going up to potentially 6. And I suppose it's all part of the same thing. How do we know what value we're getting out of those services. And I fully back the fact that we use the LAPF organisation, we use Lgps Central, because it's far better that we do it combined with other authorities. But how do we know what results we're getting from that resource that's being input?
Yeah, I mean, they are increasing the resource. I think it's been a clear dictive from the 8 partner funds involved in LGPS Central that responsible investment has to be front and centre of everything we do. And that RI team are engaged, as you'll find out next week, in the sort of development of the processes around the appointment of managers by Central and sort of the monitoring of the managers. So we do recognise that we need a strengthened team there, and that's the reason for the increase over the next 12 months. I think the other thing to say is that they do have partners. So Hermes are a voting partner. Who's the other one, Tim? Can't remember. Sorry.
Hermes give them more of a global reach. So obviously engaging with companies around the world is quite difficult.
And I think they are also aligned to lots of other sort of, industry groups as well. So they have input to industry groups. So that collaboration is not just central on behalf of 8 partner funds. It's engaging with LAPF, Hermes. There is a responsible investment working group which Tim sits on. So I think the general sort of consensus of partner funds about the activity and the direction of that activity is brought together as well. So I think it's we don't expect the team of 6 to do it all, but I think collaboration with the wider industry will get us there slowly but surely.
Thank you, Chair. I'm just going back to the investment management voting, and I'm generalising here in terms of the media play a lot in terms of amplifying when they vote with and against the management. And it tends to be more about the board's remuneration. I just open, my open question is, when we look at the managers here, what are they voting against? Is it predominantly remuneration, or are there other factors involved here?
I think it will be a mix. Obviously, responsible investment is around environment, social and governance. So there will be governance aspects to that about, the board, the auditors. There will be environmental, voting against motions for disclosure and things like that. So it will be a combination of things that they will vote against.
One of the comments I'd make about this is I'm really glad that we got engaged with the local authority pension fund forum about 8-9 years ago. I can remember there was a little bit of pushback from officers at the time about joining them, but at least they give us another way into a voice and a sort of even-handed way of dealing with these matters, because before it was a little bit we could be liable to be shot at by various groups, members of the fund itself, who were concerned about tobacco investment or arms or the like. And I noticed as I said at the pension committee a couple of weeks ago, I noticed at the Lgps in the public sector part of the meeting, there were people asking questions with a single issue, and it was nothing to do with the pension fund, the fiduciary duties, or the members of the fund. It was more about certain political aspects which could bog us down a bit. And I noticed, I'm pleased to see that Lgps Central's also involved with LAPFF as well. If we're not careful, some of these companies will be distracted. I've noticed this in my real life world, distracted from their core business. And there are some quite good comments, and it's recommended that we read, as panel members, read the report from LAPFF. Like the dam that broke in Brazil and the lack of action afterwards by the 2 companies involved. And also there's an interesting one about the move to electric cars and reduction in emissions, but you don't if you get bigger cars and bigger batteries and where's all this mineral coming from? So there's a very even-handed in the forum approach, which is a big help for us as a panel and a committee when we're making our deliberations. So that's more an observation than a question. Are there any other comments, questions on this item, on the responsible investment report? My recommendation is that you receive the report and read it. Just leaves me then to item 8, which is exclusion of the public. That the public be excluded from the meeting for the following items of business, which involve the likely disclosure of exempt information as defined in the paragraphs of Part 1 of Schedule 12A of the Local Government Act 1972 as amended indicated below.